Welcome back, guys. Long time no see. So today, actually not today, but I've been creating a system for the last 3-4 weeks, and this is actually my final project for one of my classes in my fall semester. So I get an A, easy deal. And this is about exponential moving averages and trading with them, including VWAP2, because what we are doing is actually just following the big institution, big banks. So just trying to get even the smallest piece of that cake, so we can make some money off of it. All right. So this project I created for my I created for one of my this semester's classes, and like I said, I get an A. And this project I didn't do anything with real money, but I was just creating strategies and doing some paper trading, and it works almost 90% accuracy. But I'm not 100% relying on the program, the signal that program gives me. Actually, I'm just relying on some other indicators or some other catalysts too. So let me just, before walk you guys over what's happening here. So what are we using here? Exponential moving averages. Just a brief explanation of what EMA is. Here you go. This is an example of 5 minutes periods, which is actually what we're using on the system, trading system. So let's just say 9 a.m. the close price 100, 9 and 5 past 5, and 101, 102, etc. We have a smoothing factor. What is smoothing factor? It's just using for the periods. This is the smoothing factors for 2 divided by n and represent the periods, which is 5 in this case because we're using 5 minutes time frames. Then this is our smoothing factor. Then what we do is actually just summing all of these close prices here, then divided by 5, because we took 5 periods of 5 minutes time frames. Then we got this value. What we're going to do is actually multiply the current close price with the smoothing factor, then the EMA exponential moving average, actually SMA simple moving averages. We're just finding the average of like the last 5 periods of the closes. Then we're going to take the S simple moving averages, SMA. Then we're going to multiply it with the completing, which is with a weighted average, because it must add up to 100% here. So what you're going to do is actually 1 minus 0.333 is a smoothing factor for 5 minute time periods. Then you're going to multiply the result, which is this, with the SMA or simple moving average, and we have our exponential moving average here, and done. This is our exponential moving average. So which is better than simple moving average because it's more actually sensitive to the price changes, and intraday trading is one of the best options you can use. So the 5 EMAs, we got 9 EMAs. The only thing changes actually the N factor here, which is a smoothing factor, and you're just gonna actually changing the weighted average too, which is this one, and it just goes up like this. And what is VWAP? VWAP is volume weighted average. Like, let me just give you an example too again. This is just so easy. You just actually price multiply with the volume and total volume. That's it. Easy peasy. There you go. So why are we using VWAP? Because big institutions and the big banks are actually using VWAP to just understand the price is not overvalued or undervalued. So that's why they're using VWAP, and we're going to be using VWAP to combine with exponential moving averages. We have 5, 9, 20, 3 moving averages in total, and we have VWAP plus CFO dashboard. I'm going to explain what CFO dashboard 2 is, but I have some signals here. Whenever it goes 5 bigger than 9 and 9 is bigger than 20, it is the beginning of the bullish trend, and the vice versa. 5 smaller than 9, 9 smaller than 20, it's bearish trend start. And I have some angle-based momentum confirmation too, which means if EMAs goes like this, let me just show you what I mean. if the all EMAs goes like this, it is a nice, or it just goes like this, let's just say it goes like this, it is a nice sell-off. People are selling in a short period of time. But if they're going like this, like this, like this, you see it's extended. It's extended by the long time, so which is, the momentum is not as high as this one here. So I'm going to show you guys right now on the chart so you guys understand it better. So if you go to, let's just say, last week's Friday, all right, because we had the Fed meeting here, not here, let me just go back to the Fed meeting, yeah. This is the Fed meeting and they decreased the rates. Not this one. Okay, here. Oh, by the way, the big disadvantage of this system, actually consolidation areas. If you're getting lots of signals in a short period of time, and the signals are following each other in a short period of time, again, just don't trust them, because which means actually you're in a consolidation zone. But here, this is a big catalyst. This was a big catalyst on that day, because they actually, because the Fed just decided to cut the rates, and this was a big catalyst, and system just cashed the catalyst again here too. It also checks the volume too, to confirm that's a nice signal. Here's, you can see, gives a buy signal with the following trend of 5 bigger than 9, bigger than 20. Here, this is the black one is 5, and the yellow one is 9 EMA, and 20 is the purple is 20 EMA. Here's, you can see, if you just long the market for, let's just say, how many hours? 1.5 hour, you would make a shitload of money, actually, shit ton of money, because 4 price point changes and SPY is crazy. If you short it with the, if you long it with the, let's just say, $1,000 worth of long options or call options, it's gonna be a lot of money, because you could have bought like 30 contracts. It changes, but let's say 20 contracts with the $1,000 worth of call options, and with the 4 price point changes, at least it's $4,000 of profit. How I'm saying that? Because I know I created a strategy for that shit too, because it just, this one is solely based on the signals, and I'm telling you guys, not all signals are correct, because there are some consolidation areas like this one. I just actually, I mentioned that in the GitHub too. Look at that. Here's a consolidation area. You're getting signals in like short period of time. Like you buy signal, and after 10 minutes sell signal. 10 minutes passes, buy signal. 5 minutes passes, sell signal. 5 minutes passes, buy signal. Which means you're in a consolidation area. How do you know if you are out of the consolidation area? Just watch the price, like trend. Here's the new trend starting, right? It's a bearish trend, like we said here in the, here, bearish trend started. Okay, let's just wait for some confirmation. You waited, look at the volume here, the selling volume is, started with 87K, left, top left, 87K, then it just shoots up to 212K, which is a lot when you compare it to 80K, 2x the volume. So, which actually shows, okay, this is a nice trend, and people are actually selling. This is not just a bearish trap, right? And 5 minute passes, no other signals like buy or nothing, and all EMAs are just curling down with the same angle, which is a nice signal again. You just bought it right, like around here, right? You just waited for the confirmation for the volume, and you just bought it here. Once you just came here, like it started to go up again, and you just waited again for the confirmation for the volume. It just, people are still selling. After that session here, people are selling, and you, whenever you saw the first buy signal, you're out. 3.10 price points changes. Amazing, nice profit, take it and leave it. That's it, easy. And there's a strong trend again here again. We got some short trades too, sell, wide sell, because it just, as you can see here, the 9 EMA is just slash the 3 EMAs, like 5 EMAs, I'm sorry, 5 EMAs, just slash the 9 and 20 and a 5 minute time period. So which is nice. If you just waited for the second signal, sell signal, which is a confirmation again, almost 3 point changes again, which is nice. And whenever you get some profit, just get out. That's it. That's what I've been doing with the paper trading, and it's working. And if you just follow the signals, you can create an automation system. What I'm planning to do, which is actually again profitable, even though this is not a profitable trade, like not over 50%, but we have stop losses, we have nice put options, we have the call options in the best places. So whenever it catches a nice trade, just gives you a lot of money. All right, this was my system that I just wanted to show you guys. I created this system for one of my data analytics programming classes in this fall semester, and I got an A. That was a nice success. And right now I'm planning to do a radar. It's gonna be going and just scanning all of the other stocks like Google. For example, let's just look at Google, right? Because we have some signals here too. Let's just go back and just take a look at this day. We have a strong trend, we have a sell trend, there you go, we have a sell trend here. As long as you're not in consolidation, those trends are correct. Why? Because we are following big institutions. We're just trying to catch even the smallest piece that they're just like leaving behind them. There you go. We have the very trend started. We got the sell signal, and you went in. We have crazy sell values here. Just waited for 3.6 price point changes in 1 hour. Nice trade. Get out. That's it. I'm using 5-minute time frames because 1-minute time frame has a lot of bullish and bearish traps. So I'm not following the 1 minute, 5 minute. So far is the best performing one. So that's why I'm just using 5-minute time frames. Alright, that was it for this video. I will be updating and creating more systems like this. Maybe just updating and improving this system because I like this system a lot because it's working if you do the right. And also don't look at this solely. Just don't look at the signals solely. Don't rely on them 100% because like I said, it can be consolidation areas too. So that's why just focus on what's happening. Look at the price of Bitcoin too when you're just before you get into it because it's a nice catalyst to look at the news. Look at some other catalysts. It's up to you. I'm not a financial advisor. I don't give any financial advices. This was just my project. I just want to show you guys. I don't do trade with this. I don't use real money. So just do whatever you want to do. It's not a financial advice. That's it. And if you guys are interested in finance, AI, math, whatever, just follow me, subscribe to this channel. I will be sharing more stuff, and take care.